Hello and welcome to IPO Central on ET Now. My guest today is from Urban Company. The IPO for which is opening on September 10th and closes on 12th. It's priced between 98 to 103 rupees per share. The fresh issue of 472 crores and an offer for sale of 1428 crores. So it's a 1900 crores IPO. The company will be valued at over 14,790 crores at the upper end of the price band. And joining me today is Mr. Abhiraj Singh Bhal, who is the chairperson and managing director at the company. Abhiraj, thank you very much for joining us today. A big IPO, and I think a good your investors are taking a big exit, but the company is raising only 472 crores. You don't need cash that much for your operations, or you've kept the raise very minimal in this round?
Sajeet, firstly, thank you very much for having me. It's an absolute honor. Sajeet, we are raising 472 crores as part of the fresh issue of the IPO, and this adds on to roughly over 1,600 crores that we have currently on our balance sheet. We are a debt-free company with a strong balance sheet, and we believe that along with the current balance sheet that we have, this additional fresh issue puts us in a strong position in terms of investing for all future growth endeavors that we have. We've identified technology, training, and marketing and brand building as the key areas of investment for the fresh issue beyond general corporate purposes. And we are quite excited. Yes, there is a OFS component of 1,428 crores, but that also is a relatively small proportion of the shareholding that the existing investors have in the company. And most of their shareholding continues to be intact into the public listing as well.
Abhiraj, you are primarily into home services and beauty services segment. As a urban company, are you looking to expand your reach to beyond these segments as well?
Definitely, Sajid. I think for us, our primary focus area is any and every service that can be delivered within the four walls of your home. We think of ourselves as a home services and solutions platform. Today, we offer a few services at your home, be it home cleaning services, appliance repair, electricals, plumbing, carpentry, or beauty services at home. But there are many services which we don't offer today. But in the future, we definitely will look to expand into other segments of home services as well. We will do it in a calibrated fashion. It's important for us to maintain quality of experience and control the entire supply chain of the services to deliver a superlative experience for our users. So that's something that we will keep in mind.
One of the biggest thing about platform companies is the kind of contribution margins that comes in with you. Can you give us an idea of how it's been moving, and on a plain reading of the balance sheet, your EBITDA, you've been reducing your EBITDA losses. If I'm talking about the core EBITDA losses here without other income coming into the picture. So how is the profitability pathway that you see for urban company?
So, Sujit, as you rightly said, we have a very healthy gross margin and contribution margin profile. In FY25, our contribution margin as a percentage of net revenue stood at 56%, and as a percentage of net transaction value was 19.5%. So that represents a very, very healthy contribution margin. And as a result, if you look at the last 3-4 financial years, the top line of the company has improved from 437.6 crores in FY22 to 1144.5 crores in FY25. So we've added roughly 707 crores of incremental revenue to the top line. And if I talk about adjusted EBITDA or operating EBITDA, that has improved by as much as 385 crores in that time frame. going from significantly negative to now positive 12 crores of adjusted EBITDA and positive 28 crores of profit before tax. So we've seen an improvement in the profitability of the company with growth, largely because we've been able to translate the incremental revenue into contribution and then hold our fixed costs relatively steady.
How do you see the discount environment there? Because as a platform service, you will have to continue giving discounts as you expand your offerings, as well as expanding the client base going forward. How do you see discount going through in as you expand there? Because now you're going to be part of the listed space, and and the investors and markets will very clearly look at the kind of discounting and marketing spends that you're going to do to expand your services.
Sajid, in fact, as a company, we've typically shied away from giving discounts or deep discounts unless the segments are very new and the market is competitive. We've typically wanted consumers to choose us for the value that we offer, which is high quality services rendered conveniently through the platform, versus choose us because we're offering a discount. And I think that ethos is something that we want to stick with and we would like to continue. In fact, if you see again the last 3 financial years, our marketing expenses have largely remained flat, even while top line has grown at a very healthy pace, including 38% in FY25 over FY24. So that's an ethos that we want to maintain and continue. Of course, from time to time, when we launch a new service, or if we are in a segment where competitive intensity is high, we will have to respond to that. But by and large, as a principle, we believe that uh, value for money that consumers see through the quality of the service as well as the convenience we offer is the primary reason why consumers should choose Urban Company.
Is there a seasonality to your business as well?
Sorry, can you repeat that,
Is
Sajid?
there a seasonality to your business?
Yes, there is some seasonality to the business. The April, May, June quarter coincides with the summer, and therefore we have several summer-friendly categories on the platform, such as AC service and repair and refrigerator repair, which see an upswing. Similarly, around Diwali, we see an upswing on the platform in terms of cleaning services and beauty services, which for beauty tends to flow into the wedding season as well. So those are the two points of seasonality. It's not significant seasonality, but we do see an uptick in the platform consumption during that period.
Mhm. Currently you are available in 51 cities in across 3 countries. Can you give us a sense of the kind of expansion strategy that you have with respect to various Indian cities?
So, Sajit, we can expand across two axes. One is our geographic footprint. Today, we are in about 47 cities in India, and we believe there is headroom for growth in many, many more cities. And even within this 47, several of the cities have only been recently started. So we believe there's an opportunity to penetrate much deeper into these cities as well. We are also present in about 60 service categories across 17 super categories of services. However, that assortment is not fully available even in our existing 47 cities. So, expanding the assortment across cities will be another important growth vector for us. And then, of course, as and when we add new categories, that will continue to improve the lifetime value of the user.
Mhm. I was looking at your revenue split. Roughly around 10% is coming from international business. What is the kind of opportunity that you see in that business? Because currently you are there in Singapore and UAE, and you have a joint venture in Saudi Arabia. So, what is the kind of expansion plan that you have there, and is there plans to go to the other, GCC countries as well?
Sujit, we're quite excited by our business operations in UAE, Singapore, and the Kingdom of Saudi Arabia. UAE and Singapore are markets that are both growing very well and well and truly on their path to profitability. In the Kingdom of Saudi Arabia, we have a 50-50 joint venture, so we don't recognize revenues from that market, but we do recognize our share of losses and in the future our share of profits from that JV. I think these three markets are quite large and deep, and we are still early in these markets. So we would like to do justice to these markets first. Also, we think the India opportunity is very large, and we believe that we have a long way to go in India itself. We're only in 47 cities, and if you compare us with other online platforms such as food or groceries, they would be in hundreds of cities. So I think there is an opportunity for us to expand deeper into India as well. And therefore, I would say for the next foreseeable future, our focus will be on India as well as the three markets that we are present in outside of India.
Give me a sense of the kind of growth that you're seeing for your native brands. I guess these are private brands for you. How are you looking at these brands and what kind of categories are you in as of now? And how do you plan to expand it?
Sujit, in the sub-brand Native, we have two product categories that we offer consumers. We offer them a smart water purifier and we offer them a smart electronic door lock, both of which are also integrated into the Urban Company app. Uh, in these two categories, we leverage our platform capabilities as well as our service capabilities to really offer a superior solution to the end consumers. And we also believe through our R&D and product development efforts, we have invested quite meaningfully in product development and have truly best-in-class products out there. Uh, the categories have grown well. Native in the first quarter of April, May, June 2025 has grown at more than 3x year on year compared to the same period last year and has also improved its margin profile. So I think the focus will be on, again, going deeper into these two categories, becoming significantly larger and eventually profitable in the native segment.
Mhm. Uh, because you have entered into water purifier and home locks, is there a plan to enter into fast moving electrical goods as well going forward?
No, not at this point in time. I think we have our hands full with these two segments, and both of them are very, very nascent and early. And we believe that we really have to do justice to the opportunity here. So I think for some time we will be focused on this.
Let me come back to your profitability path there because you have been growing and you have a healthy contribution number, but on a net basis or on a core EBITDA basis, when do you see EBITDA cash positive for you?
So on a cash flow basis, Sajid, we were profitable in FY25. We generated about 54.5 crores of positive cash flow from operations. And we were also profitable at an adjusted EBITDA and a profit before tax basis. Adjusted EBITDA was about 12 crores and profit before tax was about 28 crores. Of course, these are small numbers given the size of the company. So one can assume that it's more like a break-even level that we have reached right now. I think our priority for the next couple of years will be A, to continue to invest behind some of the new businesses that we are building, which are growing strongly, whether it is Native or InstaHelp. And B, to continue to compound our core services business in India as well as UAE and Singapore at a profitable rate and continue to improve margin profiles therein. Um, so I think that summarizes how we think about the next couple of years. We are, definitely eager to build the company profitably and improve our margin structure, particularly in the core services business in India. But at the same time, we also recognize that we are still, in the scheme of things, a relatively small and early stage company and have a huge opportunity ahead of us. And we need to continue to invest behind building the capabilities that will help us do justice to that opportunity.
Uh, if you can give us an clarity on are there going to be ESOP charges that will go through the P&L in the next couple of years, and what could be that impact on your P&L?
Sujit, definitely there will be ESOP charges. We have always considered ESOPs to be a strong retention and motivation tool for our employees. We see ESOPs as a very real expense. Even though it's a non-cash based expense, we don't think of it any differently than any other line item in our P&L. So we will be mindful that the ROI on the ESOP expenses that we incur is high for our shareholders. I also want to highlight that as founders, we are promoters in this company, and therefore there are no ESOPs for the founders, which is somewhat different from what we have typically seen in new age listed businesses, where bulk of the ESOP charge actually goes towards the founding team and incentivizing the founding team. That to that extent, that's not the case with Urban Company. There'll be no ESOP charge or expense for the founders because we have been identified as promoters in the company. That being said, for the rest of the employee base, there very much will be ESOP expenses, and we will work hard to make sure that shareholders see a fairly high ROI on those investments.
Since these charges will go through the P&L, know it will have it will depress your profitability in that sense. So is there a timeline of how many years these charges will be going through the P&L?
I think at this point in time, we are not, giving a future guidance on ESOP charges and for how long or what quantum will they be. I think once we are listed, we will have a better sense of what that could look like, and at the right time, we will definitely come to all the market participants and transparently share our thought process and principles around ESOPs and what they can expect.
Well, Abhiraj, it was a pleasure talking to you today on ET Now. Thank you for joining us on IPO Central. Your IPO is closing on 12th and opens on 10th of the month, 98 to 103, and roughly 1900 crores of the issue, and values the company at nearly 14,790 crores or so. Thank you for joining us today on ET Now.
Thank you so much, Sajeet. Thank you for having me. It's my pleasure.